Whether it's shopping for groceries at a supermarket or paying for a meal at a restaurant, everyone pays a goods and services tax of 7%. Mr. Taman says it's a flat tax which takes up more of the pay of those with low incomes. The GST voucher aims to address that. The vouchers will be given to households in 3 ways: cash, MediSave top-ups and USave. The amount each person gets is based on both income and annual value of their homes. The cash component is given to those whose incomes fall within the bottom 40% and live in HDB flats or the bottom 15% of private properties. Those in HDB flats will get $250 each year, while those in lower-end private properties get $100 as long as their incomes are below $24,000 a year. The second component will comprise an annual top-up to the MediSave accounts of older Singaporeans. Those above 65 and living in HDB flats or lower-end private properties will get this. This would benefit 85% of all elderly Singaporeans. The third component will help lower and middle-income households through a permanent USave rebate to offset part of their utilities bills. Households living in smaller flats will benefit more. For instance, those in 1- and 2-room flats will get $260 a year. Mr. Taman says this is equivalent to about 3 to 4 months of their utilities bills on average.
Let me illustrate how the GST voucher adds up when you add up the cash, MediSave top-ups and the USave. A retiree couple living in a 3-room flat will receive enough to offset fully the GST that they pay each year. They typically pay about $840 in GST a year, but they will receive, through this voucher, $1,240. Take an example of a younger lower-income household without elderly persons in 3- or 4-room flats. They too will receive a significant GST offset. It should cover about half of the total GST payments they make each year.
It's a very smart move because when you have a temporary scheme and you announce it for 5 years ahead, people forget that you've, received this benefit. So the GST voucher is a very good idea to remind people that this is meant to offset your GST costs. And it's very targeted, it's there to stay.
The government has set aside $3.6 billion to finance the scheme for the next 5 years to ensure it can provide the vouchers even if the economy is not doing well.